Most traders believe the secret to success is hidden somewhere in the future. They think if they just gather enough information, if they just study one more strategy, if they just stare at the screen long enough, they will finally discover certainty, a way to know what will happen next. You have felt that desire. You open a chart and you don't really want probability. You want reassurance. You want confirmation. You want something that tells you this trade will work. And the moment you start needing that kind of certainty, you've already stepped out of the zone. The higher time frames reveal something most traders don't want to see. They move slowly. They unfold over days, sometimes weeks. They don't rush to reward impatience. They don't validate emotional impulses. They expose them. When you look at a higher time frame, you're forced to confront the truth. The market is not reacting to your need. It is unfolding according to a broader flow. And in that broader flow, every single candle, every single movement is just one event in a long series of events. You've probably noticed how different you feel when you drop down to smaller time frames. Everything feels urgent. Every tick feels important. Every small movement feels personal. Your heart beats faster. You feel like something is about to happen. But step back. Look at the bigger picture. Suddenly, the noise disappears. The frantic movements become insignificant. What felt like chaos becomes structure. What felt like danger becomes context. This is where the myth of certainty begins to crack. You don't need to know what the next candle will do. You don't need to predict the next few minutes. You need to understand that over a large enough sample of trades, your edge plays out. The higher time frames force you into probability thinking because they slow you down. They remove the illusion that you can control outcomes moment to moment. They show you that markets breathe. They expand and contract. They trend and retrace, not because you are right or wrong, but because that is their nature. Most traders fail because they secretly expect each trade to validate them. They take a position and immediately begin watching it like it owes them something. If it moves in their favor, they feel smart. If it moves against them, they feel attacked. And without realizing it, they are measuring their worth by random fluctuations. That is not trading in the zone. Trading in the zone means understanding that every trade is simply one data point in a distribution of outcomes. Some will win, some will lose. And the outcome of this trade tells you nothing about your intelligence, your future, or your potential. The higher time frames remind you of this constantly. They don't move fast enough to feed your ego. They don't provide instant gratification. They demand patience. They demand that you accept uncertainty as a constant companion. And when you truly accept that uncertainty, something shifts inside you. You stop trying to predict. You start observing. You stop forcing trades. You start waiting for alignment. You stop asking, will this win? And begin asking, does this fit my edge? That shift is subtle, but it changes everything. Because once you operate from probability instead of prediction, you no longer need certainty. You need consistency. And consistency is something you can control. As you begin to see this clearly, another layer reveals itself. The real obstacle was never the market. It was the hidden psychological traps you didn't even realize were guiding your behavior. You felt the fear. The moment a trade starts going against you, there's that tightening in your chest, a small voice that says, what if this turns into a big loss? You consider closing early, not because your rules say so, but because you want relief. You've felt greed too. A trade moves in your favor, and suddenly what was once enough is no longer enough. You want more. You move targets further away. You imagine the bigger win. And in chasing more, you expose yourself to unnecessary risk. Overconfidence can creep in quietly. After a series of wins, you feel untouchable. You increase size. You relax your rules. You believe you have finally figured it out. And the market humbles you, not out of cruelty, but because randomness has not disappeared. Denial shows up when a trade clearly invalidates your idea, but you refuse to accept it. You hold on. You hope. You convince yourself it will come back. Hesitation appears when everything aligns, but you're paralyzed by memories of past losses. You miss the trade, then watch it move without you, reinforcing the belief that you can't trust yourself. Attachment to outcomes ties it all together. You don't just want to trade well. You want this trade to win. You need it to prove something, and that need distorts your perception. You begin seeing what you want to see instead of what is actually there. The higher time frames help you see these distortions more clearly because they slow the entire process down. They remove the urgency that feeds emotional reactions. They give you space to notice your thoughts. When you look at a daily chart instead of a 1-minute chart, you can feel the difference in your body. There's less tension, less compulsion, more room to think. And in that space, you can catch yourself. You can notice when fear is speaking instead of logic. You can recognize when greed is pushing you beyond your plan. You can see when overconfidence is whispering that you are special. This awareness is not about eliminating emotion. It's about not letting emotion dictate action. As that awareness grows, you realize that mastering higher time frames is not really about time at all. It's about perspective. And perspective gives you the ability to craft something powerful, a true edge rooted in mental discipline. An edge is not just a pattern or setup. It is a defined way of interacting with uncertainty. You need clarity. Clarity about what conditions you are willing to trade. Clarity about how much you are willing to risk. Clarity about when you will exit, regardless of how you feel. Write it down. Not in vague terms, not in emotional language, in simple, concrete statements that remove ambiguity. When this condition is present, I will enter. I will risk this amount. If price reaches this point, I will exit. No negotiation, no debate. The higher time frames support this discipline because they reward patience. They don't offer constant opportunities. They require selectivity. And selectivity is a form of power. You also need a personal why. Not a dramatic story, not an external validation, but a quiet understanding of why you are doing this. If your reason is to feel smart, you will suffer. If your reason is to prove something to someone, you will suffer. If your reason is aligned with growth, with discipline, with long-term mastery, then every trade becomes practice. Every outcome becomes feedback. Daily routines reinforce this mindset. You review the higher time frames first. You orient yourself within the broader context. You remind yourself that today's movement is part of a larger flow. You define your levels of risk before you enter. You accept the loss before you click. This acceptance is not passive, it is deliberate. It is a conscious decision to say, if this trade fails, I am still okay. And this brings you to the foundation of everything, accepting risk completely. Not intellectually, emotionally. Most traders think they accept risk because they set a stop. But the moment price approaches that stop, anxiety rises. Doubt appears. They move it. They hope. True acceptance means you have already processed the possibility of loss before entering. You've imagined it, you've felt it, and you've decided it is acceptable. Position size becomes a reflection of this acceptance. If you are anxious during a trade, your size is too large. If you cannot sleep because of an open position, your size is too large. Capital is not a tool for proving courage. It is a tool for expressing probability over time. Scaling in or out should not be emotional reactions. They should be predefined decisions based on structure and risk tolerance. When risk is fully owned, something remarkable happens. Losses lose their emotional sting. They become expected events within a larger system. You stop reacting. You start executing. And then, inevitably, you will make mistakes. You will break your rules. You will exit too early. You will hold too long. You will misinterpret context. What matters is how you respond. If you judge yourself harshly, you create fear. If you ignore the mistake, you create repetition. Instead, you observe, was this a true error? Or simply a losing trade within your edge? There is a difference. A losing trade that followed your rules is not a mistake, it is variance. A rule violation that happened to win is still a mistake. Higher time frames make this easier to see because they reduce the noise that often disguises emotional decisions as strategy. Create a review process. After each trade, ask simple questions. Did I follow my plan? Did I accept the risk fully? Was my decision aligned with my defined edge? No judgment, just information. Over time, patterns emerge. Not in the market, but in you. You begin to see where you hesitate, where you rush, where you bend rules. And with awareness comes the opportunity to change. As you continue this process, something deeper begins to form. You are no longer chasing the next win. You are building trust with yourself. And trust is what sustains the zone over time. Drawdowns will come. There will be periods where your edge produces more losses than wins. This is not a sign that you are broken. It is a sign that probability is unfolding. If you have truly embraced higher time frame thinking, you will understand that short-term sequences do not invalidate long-term edges. You remain calm. You reduce size if necessary, not out of fear, but out of respect for capital preservation. You preserve mental energy because the zone is not about intensity. It is about flow. You stop fighting randomness. You stop demanding immediate results. You operate in harmony with uncertainty. Each trade is taken without hesitation when it aligns. Each loss is accepted without drama. Each win is appreciated without attachment. And gradually, almost quietly, you become different. You are no longer the trader staring at every tick, searching for certainty. You are the trader who sees the bigger picture. You are no longer defined by individual outcomes. You are defined by consistent execution. You are no longer reacting emotionally to randomness. You are participating in it with awareness. The higher time frames were never just about longer charts. They were about expanding your perspective. And when your perspective expands, your mind settles. When your mind settles, your decisions become clear. When your decisions become clear, your results begin to reflect who you have become. Not someone chasing certainty, but someone who understands that mastery lies in embracing probability, in accepting risk, in learning from variance, and in acting consistently despite uncertainty. In that state, you are not trying to conquer the market. You are aligned with it. And that alignment is the true secret to trading in the zone. When that alignment begins to take root inside you, something subtle but powerful happens. You stop feeling like you are standing in front of the market trying to outsmart it. Instead, you feel as if you are standing beside it, observing its rhythm. Higher time frames teach you rhythm, not in a technical way, in a psychological way. On smaller time frames, everything feels urgent. It feels like you must act now or you will miss out. You feel as though the opportunity is fragile, fleeting, about to disappear forever. But when you study the larger perspective, you begin to see repetition. Movements that once felt dramatic now look ordinary. Swings that once felt catastrophic now appear as natural pauses. You realize the market is not constantly attacking you or rewarding you. It is simply moving. This realization weakens one of the deepest illusions traders carry, the illusion of personal significance. You have felt it before. A trade goes against you, and it feels like the market singled you out. A trade wins, and it feels like you conquered something. But the higher time frame view dissolves that narrative. It shows you that your trade was just a tiny participation inside a much larger unfolding process. There is freedom in that, because if the market is not personal, then your losses are not personal either. And once losses are no longer personal, you stop defending against them emotionally. Defensiveness is what keeps you from seeing clearly. When you defend, you justify. You rationalize. You search for reasons why the market was wrong instead of asking whether you followed your plan. Higher time frames make it harder to defend impulsive behavior. If you enter randomly on a daily chart, it is obvious. There is no hiding behind fast movement. There is no blaming a sudden spike. The lack of structure becomes visible. And this visibility forces honesty. Honesty is uncomfortable at first. It requires you to admit that many of your past struggles were not about strategy. They were about impatience, about fear, about the need to feel right. But honesty also opens the door to control. Because while you cannot control outcomes, you can control your behavior. This is where the real shift into the zone begins to deepen. You start measuring yourself not by profit and loss, but by alignment. Was I aligned with my rules? Was I aligned with my risk tolerance? Was I aligned with probability? If the answer is yes, then the outcome becomes secondary. This mindset does not make you passive. It makes you stable. And stability is rare in trading. Most traders live in emotional swings that mirror their equity curve. When they win, they feel invincible. When they lose, they question everything. But when you anchor yourself to higher time frame thinking, you begin to detach your identity from short-term results. You understand that a series of losses does not mean you are incapable. It means you are experiencing a natural distribution. You understand that a series of wins does not mean you have unlocked certainty. It means probability is temporarily flowing in your favor. This emotional neutrality is not coldness. It is clarity. Clarity allows you to stay consistent. And consistency is what turns a statistical edge into real growth. Think about how many times you have abandoned a plan after a few losses. You felt frustration, doubt, maybe even embarrassment. You told yourself the strategy was flawed. Or maybe you were flawed. But if your edge truly had a positive expectancy, abandoning it mid-distribution guaranteed failure. Higher time frames stretch your perception of time. They remind you that meaningful outcomes require patience. They slow you down enough to see the long arc instead of the short fluctuation. This expanded perception reduces impulsivity. Impulsivity is often a response to discomfort. When you feel uncertainty, you want relief, so you act. You close early, you enter too soon, you increase size to recover faster. But when you operate from a broader perspective, discomfort becomes tolerable. You know that you are not trying to win this moment. You are trying to execute well over many moments. That understanding changes your relationship with time. Time is no longer something you are racing against. It becomes something you cooperate with. You wait without tension. You observe without craving. You let setups form fully instead of forcing them into existence. This waiting is not inactivity. It is preparation. In that preparation, you begin to experience something traders often misunderstand. Calm confidence. Calm confidence does not shout. It does not demand action. It does not seek validation. It simply knows that when conditions align, you will act. And when they do not, you will not. The higher time frames cultivate this because they reduce noise. Noise feeds doubt. Noise feeds overtrading. Noise feeds the illusion that something important is always happening. But when you remove the noise, you see that important opportunities are rare. And because they are rare, they deserve patience. Patience is a psychological skill. It is built through repetition. Each time you resist the urge to act impulsively, you strengthen it. Each time you follow your plan despite fear, you strengthen it. Each time you accept a loss without self-criticism, you strengthen it. Gradually, your internal dialogue begins to change. Instead of asking, how much can I make from this trade? You ask, is this aligned? Instead of thinking, I hope this wins, you think, I accept whatever this produces. Instead of feeling tension while waiting, you feel readiness. Readiness is powerful. It means you are not desperate. Desperation clouds perception. When you need a trade to win, you see signals that are not there. You interpret normal movement as confirmation. You ignore risk. But when you are ready rather than desperate, your mind remains open. Openness allows you to process information objectively. Objectivity is at the heart of trading in the zone. In the zone, you are not predicting. You are responding. You are not controlling. You are participating. You are not resisting uncertainty. You are flowing with it. And the higher time frames reinforce this because they continuously remind you that no single movement defines the whole. Imagine looking at your trading journey the same way you look at a weekly chart. Some weeks are down, some weeks are up. But over time, a pattern emerges. If you stay consistent, if you manage risk, if you refine your process, growth becomes visible. Not in dramatic leaps, in steady progression. This is not exciting in the short term. It does not satisfy the part of you that wants quick transformation. But it builds something far more valuable, resilience. Resilience means you do not collapse during drawdowns. You do not abandon your principles when conditions become difficult. You adapt without panic. Higher time frame thinking encourages this adaptability. When you zoom out, you see cycles. There are phases of expansion, phases of contraction, periods of clear movement, periods of consolidation. You begin to understand that your edge may perform differently in different conditions. Instead of reacting emotionally to this variation, you account for it. You reduce size when volatility increases beyond your comfort. You step aside when conditions do not align with your plan. Stepping aside is a skill many traders never learn. They feel obligated to trade daily. They equate activity with productivity. But the higher time frames teach you that sometimes the most powerful action is restraint. Restraint preserves capital. It also preserves mental energy. Mental energy is often overlooked. Every impulsive decision drains it. Every emotional reaction drains it. Every regret drains it. But when you operate calmly, selectively, and objectively, you conserve it. And conserved mental energy allows you to remain clear over long periods. Long-term clarity is what separates those who survive from those who burn out. You've seen it before. Traders start with enthusiasm. They study intensely, they trade aggressively, they experience early wins or losses that create emotional spikes. Then slowly, fatigue sets in. They question themselves, they overanalyze, they chase. Eventually, they step away discouraged. This cycle is rarely caused by lack of intelligence. It is caused by unmanaged psychology. Higher time frame mastery interrupts this cycle. It encourages slower decision making. It reduces frequency. It emphasizes process. In doing so, it creates sustainability. Sustainability is not glamorous. It does not generate stories of overnight success, but it builds careers. And as sustainability becomes your focus, your goals shift. You are no longer trying to double your account quickly. You are trying to execute flawlessly. You are no longer chasing big wins. You are protecting your ability to stay in the game. Staying in the game is underrated. Because as long as you are present, disciplined, and learning, your edge has the opportunity to play out. But once you self-destruct through emotional decisions, that opportunity disappears. Higher time frames constantly remind you that longevity matters more than intensity. This realization reshapes your identity. You stop seeing yourself as someone trying to beat the market. You start seeing yourself as a risk manager, someone who participates when probability aligns, someone who protects capital during uncertainty, someone who accepts that the future is unknowable, yet trades anyway. That acceptance is maturity. Maturity in trading is not about experience alone. It is about perspective. Perspective gained from zooming out. Perspective gained from understanding randomness. Perspective gained from observing your own mind. As this maturity deepens, the zone stops being a temporary state and becomes a default orientation. You do not need perfect conditions to feel calm. You do not need winning streaks to feel confident. Your confidence comes from execution. Your calm comes from acceptance. Your clarity comes from alignment. And perhaps most importantly, your sense of worth detaches from individual trades. You no longer wake up thinking about whether yesterday's loss defines you. You no longer go to sleep obsessing over missed opportunities. You understand that your role is simple. Define your edge. Manage your risk. Execute consistently. Review honestly. Repeat. This repetition, done with awareness, creates quiet mastery. Not dramatic, not loud, but steady. And when you look back months or years from now, you will not remember the specific trades. You will remember the transformation. The moment you stopped chasing certainty, the moment you embraced probability, the moment you allowed higher time frame thinking to reshape your behavior. In that transformation, you become something rare in trading. You become internally stable in an externally uncertain environment. And that stability is what allows you to remain in the zone, not just for a trade, but for a lifetime. When that internal stability becomes familiar to you, trading starts to feel different. Not easier in the sense that losses disappear, not easier in the sense that uncertainty vanishes, but easier in the sense that you are no longer fighting yourself. Most traders are not fighting the market. They are fighting their own expectations. You've felt that internal conflict before. Part of you knows that no single trade matters, but another part of you desperately wants this one to work. Part of you understands that losses are normal, but another part feels threatened every time one appears. That inner split creates tension, and tension pulls you out of the zone. Higher time frame mastery slowly dissolves that split. When you consistently orient yourself to the bigger picture, your mind begins to trust the process. You stop needing immediate feedback to feel secure. Security shifts from outcome to structure. Structure is powerful because it removes emotional negotiation. When you define your rules clearly and operate within them consistently, you reduce internal debate. And internal debate is exhausting. Think about how much energy you've spent arguing with yourself during a trade. Should I close it now? What if it reverses? Maybe I should add more. That constant questioning erodes clarity. But when your framework is grounded in probability and reinforced by higher time frame context, your decisions simplify. You either have alignment or you don't. You either accept the risk or you step aside. There is no drama in that. And the absence of drama is what keeps you in the zone. Drama feeds ego. Ego feeds attachment. Attachment feeds fear. The zone requires detachment, not indifference, but balanced engagement. You care about executing well. You care about protecting capital, but you do not care about forcing outcomes. As this balance strengthens, you begin to notice something subtle about time itself. On smaller time frames, time feels compressed. Every minute stretches. Every movement feels urgent. On higher time frames, time feels expansive. You're not waiting for something to happen every few seconds. You're allowing processes to unfold naturally. This expanded sense of time calms your nervous system. It reduces impulsivity at a biological level. Your breathing slows. Your thoughts space out. You are no longer reacting to every flicker. And in that calmer state, your perception improves. You see context instead of noise. You see flow instead of chaos. You see opportunity without desperation. This is why higher time frames are not just a technical choice. They are a psychological tool. They force you into alignment with patience. Patience is often misunderstood as passive. But in trading, patience is active discipline. It is the decision to wait for clarity rather than chase stimulation. Stimulation can feel productive. It feels like you are doing something. But doing something is not the same as doing the right thing. When you internalize this, you stop measuring your day by the number of trades taken. You measure it by the quality of your decisions. A day with no trades can be a successful day if it reflects discipline. A day with many trades can be a failure if it reflects emotional reactivity. This reframing protects you from one of the most dangerous traps in trading, the need to constantly participate. You do not need to be in the market to grow. You need to be aligned when you are in it. Alignment creates consistency. Consistency creates statistical expression. Statistical expression creates growth. And growth, when rooted in process, is sustainable. As months pass and you continue operating this way, you begin to trust something deeper. You trust that you do not need to rush. You trust that opportunities will return. You trust that losses do not signal danger. This trust reduces anxiety. Anxiety often comes from believing that something essential is slipping away. But the higher time frame perspective reminds you that markets cycle. Opportunities reappear in different forms. What matters is your readiness when they do. Readiness is cultivated through routine. Reviewing your trades honestly, tracking your adherence to rules, reflecting on emotional reactions without judgment. Each review strengthens awareness. Awareness strengthens control. Control, in this sense, does not mean controlling outcomes. It means controlling responses. When you can control your responses consistently, you remain steady regardless of external fluctuation. Steadiness allows compounding to work. Compounding is quiet. It does not explode overnight. It builds gradually through repeated disciplined actions. The same way a weekly chart builds trend through many daily movements, your account builds through many consistent decisions. This is where long-term mastery lives. Not in dramatic wins. In ordinary, well-executed trades, repeated over time, you may not feel extraordinary while doing this. In fact, it may feel almost mundane. But that mundanity is a sign that you are detached from emotional highs and lows. You are operating from structure. Structure is what allows creativity within boundaries. Once you are grounded in rules and probability, you can adapt thoughtfully. You can refine your edge without abandoning it. You can adjust risk when conditions shift without panic. You can sit through drawdowns without questioning your identity. Your identity becomes tied to discipline, not results. And that identity shift is perhaps the deepest transformation of all. You are no longer someone trying to prove something. You are someone practicing a craft that requires patience, a craft that rewards consistency, a craft that humbles ego and strengthens awareness. The higher time frames continue to reinforce this humility. They show you that markets are vast, that movements extend beyond your single trade. You are participating in something larger than your personal narrative, and there is peace in that. Peace does not mean you stop caring. It means you stop resisting reality. Reality in trading is uncertainty. Uncertainty is not an obstacle to eliminate. It is the environment to operate within. When you fully accept that, you no longer seek guarantees. You seek alignment, You no longer crave constant confirmation. You trust your process. You no longer fear randomness. You expect it. And when randomness is expected, it loses its emotional charge. Losses become data. Wins become data. Both feed your understanding. Neither define you. At this stage, trading in the zone is not a peak state you occasionally enter. It becomes your baseline. You approach each session with clarity. You assess higher time frame context calmly. You define risk deliberately. You execute without hesitation. You accept outcomes without resistance, and you repeat. Over time, this repetition builds quiet confidence. Not arrogance, not excitement, but deep, stable confidence rooted in self-trust. Self-trust is earned. It is earned each time you follow your plan when it would be easier not to. It is earned each time you accept a loss without self-criticism. It is earned each time you resist the urge to chase. As self-trust strengthens, fear weakens. Fear may still arise, but it no longer controls you. You observe it, you acknowledge it, but you act according to your structure. This is freedom. Freedom from impulsivity, freedom from emotional dependence on outcomes, freedom from the need to be right. And when you reach this point, you realize something profound. The secret of higher time frames was never about the charts themselves. It was about expanding your perspective until your mind could hold uncertainty without collapsing. It was about slowing down enough to see that probability governs outcomes, not desire. It was about learning to cooperate with time instead of fighting it. And through that cooperation, you became different, calmer, more patient, more deliberate, more aware. The market is still uncertain. Risk is still present. Losses still occur. But you no longer interpret these as threats. You interpret them as elements of the process. You are steady in an environment that constantly shifts. You are disciplined in a space that tempts impulsivity. You are patient in a culture that rewards speed. And that combination is rare. It is not loud. It does not seek attention, but it endures. And endurance, supported by probability and discipline, is what allows you to stay in the zone not for a moment, but as a way of being. In that way of being, you are no longer chasing mastery. You are living it, quietly, consistently, aligned with uncertainty, yet unaffected by it. That is the true power of perspective. That is the real secret hidden in the higher time frames. And that is who you become when you finally understand it. And once you begin living from that place, something else becomes clear. The market no longer feels like a battlefield. It feels like an environment. There is a difference. A battlefield demands aggression. It demands that you win. It creates tension before you even begin. An environment simply exists. It contains opportunity and risk. It does not care whether you participate. It does not reward intensity. It responds to structure. When you approach trading as a battlefield, you exhaust yourself. When you approach it as an environment, you adapt. Higher time frames quietly train you to adapt. They teach you that movement unfolds whether you are involved or not. They teach you that no single moment defines the whole. They teach you that patience reveals structure. And structure reduces emotional chaos. Emotional chaos is what has cost you more than any strategy ever did. Think about how many losses were not caused by poor analysis, but by impatience. How many times you entered early because you feared missing out? How many times you exited too soon because you feared giving back profit? How many times you doubled risk to recover quickly? Those were not technical failures. They were emotional reactions to uncertainty. Higher time frame thinking gradually weakens that reactivity. Because when you zoom out, urgency fades. You begin to realize that you do not need to extract something from the market today. You need to execute well today. That subtle change in focus shifts everything. Execution is within your control. Extraction is not. The more you focus on what you can control, the less emotional volatility you experience. Emotional volatility is often higher than market volatility. One small loss can create hours of self-doubt. One missed trade can trigger days of regret. But when your attention rests on process rather than outcome, these emotional swings soften. You still feel disappointment. You still feel satisfaction, but they pass more quickly. They no longer hijack your behavior. You begin to observe your own thoughts with distance. You notice the impulse to interfere with a trade. You notice the urge to check price repeatedly. You notice the desire to feel certain. And instead of reacting automatically, you pause. That pause is powerful. In that pause, you remember your structure. You remember that each trade is just one event. You remember that the higher time frame context remains intact. And with that remembrance, your actions stabilize. Stability creates rhythm. Rhythm creates flow. Flow is not something you force. It emerges when resistance drops. When you stop resisting losses, when you stop resisting waiting, when you stop resisting uncertainty, you begin to move with the market rather than against your own emotions. Over time, this movement becomes natural. You do not need constant motivation to stay disciplined. Discipline becomes habit. Habit becomes identity. Identity shapes behavior effortlessly. You wake up and review the broader context without compulsion. You define risk calmly. You enter without internal conflict. You exit without regret. This does not mean perfection. You will still have moments of hesitation. You will still have flashes of doubt. But those moments no longer define your actions. They are simply mental events passing through awareness. Awareness is what sustains the zone. Without awareness, you fall back into autopilot. Autopilot is driven by fear and desire. Awareness is driven by observation and choice. The higher time frames encourage awareness because they demand that you slow down enough to see clearly. Slowing down is uncomfortable in a world obsessed with speed. But speed often hides insecurity. When you feel secure in your process, you do not rush. You allow things to unfold. This unfolding mirrors life beyond trading. Not everything resolves immediately. Not every effort produces instant results. Long-term growth in any craft requires repetition, patience, and acceptance of variance. Trading simply exposes these truths more directly. The numbers do not lie. The outcomes are measurable. The feedback is immediate. And because of that, trading becomes a mirror. It reflects your beliefs about risk. It reflects your tolerance for uncertainty. It reflects your relationship with control. When you master higher time frame thinking, you are not just adjusting your chart view. You are adjusting your belief system. You begin to believe that uncertainty is manageable. You begin to believe that patience pays. You begin to believe that consistency outweighs intensity. These beliefs shape your emotional responses. They reduce the need to chase. They reduce the fear of missing out. They reduce the compulsion to prove something. Gradually, you experience a deeper kind of confidence. Not confidence in predicting outcomes, confidence in handling whatever outcome appears. That distinction is critical. Predictive confidence collapses when you are wrong. Adaptive confidence remains steady because it does not depend on being right. It depends on responding well. Responding well means following your plan. Responding well means accepting risk. Responding well means learning from deviation. This adaptive mindset is what allows longevity. Longevity is the real measure of mastery. Anyone can experience a short burst of success. Few can remain steady across years of uncertainty. Higher time frames cultivate that steadiness. They stretch your thinking beyond today. They align your perspective with longer cycles. They remind you that growth compounds slowly. And as you internalize this, your ambition transforms. You stop seeking dramatic wins. You seek flawless execution. You stop fantasizing about shortcuts. You embrace gradual improvement. You stop reacting emotionally to fluctuations. You trust the distribution, and in trusting the distribution, you free yourself from the need to control what cannot be controlled. That freedom is subtle but profound. It allows you to sit calmly in front of uncertainty. It allows you to hold positions without anxiety when aligned. It allows you to close positions without regret when invalidated. It allows you to step aside without fear of missing out. The zone, at its core, is this freedom. Freedom from emotional compulsion. Freedom from outcome dependency. Freedom from internal conflict. And the higher time frames serve as constant reminders of that freedom. They show you that the market does not move for you. They show you that patience reveals clarity. They show you that structure outlasts noise. Over time, you stop trying to extract certainty from chaos. You accept chaos as part of structure. You accept randomness as part of probability. You accept losses as part of growth. And in that acceptance, your mind settles. A settled mind sees clearly. A clear mind acts decisively. Decisive action aligned with probability produces sustainable results. Sustainable results reinforce trust. Trust reinforces calm. Calm reinforces the zone. And so the cycle continues. Not driven by emotion, driven by awareness, driven by discipline, driven by perspective. You become someone who can sit in uncertainty without flinching, someone who can wait without agitation, someone who can lose without self-judgment, someone who can win without arrogance. That is the transformation. Not from losing trader to winning trader, but from reactive participant to conscious operator, from emotional decision maker to structured executor, from seeker of certainty to student of probability. The higher time frames did not change the market. They changed you. They expanded your view. They slowed your impulses. They anchored your behavior. And through that anchoring, you found stability in a shifting world. That stability is not fragile. It is built on repetition, on risk acceptance, on self-observation, on consistency. And when you operate from that foundation, the zone is no longer something you hope to enter. It is the natural result of who you have become. Calm, aligned, patient, disciplined, fully aware that the next outcome is uncertain, and fully at peace with that uncertainty.